Treasury bills are a great way for you to invest your money for the short term at nearly no risk. Let's say that you have cash saved up and you want to use that for a down payment on a house in the near future. Well, with Treasury bills, you are pretty much guaranteed that your money is going to be safe, and as of the recording of this video, you can earn over a 5% rate. And because of that, I felt the need to squeeze as much information about Treasury bills into this video for you so that you can go from a complete beginner to a Treasury Bill Specialist. So as always, before we dive deep into things, all I ask from you is that you kindly hit the like button on this video because it really does help out my channel and your support is greatly appreciated. With that being said, let's start off by explaining what even are Treasury bills. So Treasury bills are basically bills that are found inside of a treasure chest. But jokes aside, Treasury bills are short-term debt securities that are issued by the US Treasury and backed by the full faith and credit of the US government, which is why there's nearly no risk at all when it comes to investing in them. And when you go to invest in Treasury bills, you are going to be getting a fixed rate of interest, which means you are going to know how much you're going to make before even making the purchase, assuming that you hold the Treasury bill the entire time. Now, when I say the entire time, a common term that's used in the financial world is maturity, and that basically is the lifespan of the entire Treasury bill. And the typical range that you're going to see for these is from 4 to 52 week periods, and that may include 4, 8, 13, 17, 26, and 52 weeks. Now, something else I want you to know about Treasury bills is that there are also Treasury notes and Treasury bonds. Treasury notes are considered medium-term debt that have maturities between 2 and 10 years, where Treasury bonds are long-term debt securities that have maturities of 20 to 30 years. Now, I'm going to dive into much more detail later in the video about the overall benefits and things to be aware of with Treasury bills, but the simplest way to view it is that Treasury bills are a way for you to get a pretty much guaranteed return on your cash for the short term at nearly no risk. And the reason they're being talked about so much more during 2023 is because they're giving out the highest yields they've seen since 2007, and that is due to the Federal Reserve's interest rate hikes. Alright, so moving on from there, if you're still confused, don't worry because I'm about to explain exactly how Treasury bills work. So first off, Treasury bills work by you basically giving the government a short-term loan where they can use your money to their best benefit, and then they pay you back with the interest earned at the end of the maturity when the T-bill officially expires. Let me explain to you how this works with a simple example. Let's say you want to buy $1,000 worth of Treasury bills that have a maturity of 52 weeks and gives out a yield of 5%. That yield is also known as the discount rate because with Treasury bills, you are going to discount that percentage from the initial $1,000 you wanted to buy. Now, that $1,000 is actually called the face value and is not the amount it will cost you when you initially purchase your Treasury bills. The actual amount you're going to pay is $950 because you're going to be discounting the 5% rate from the face value, the $1,000. And how it works is that after a full 52 weeks of owning the T-bill, you're going to receive the face value, the $1,000. So that $50 difference is called the interest you earned from owning the T-bill. Now, something to clarify for you about Treasury bills is that because they have such a short maturity length, they are not going to be paying out any interest payments, also known as coupon payments, during the time of you owning the bill, and that is because you are going to be getting the entire thing, all of the interest, at the end. Which, just so you know, Treasury notes and bonds typically pay interest payments every 6 months. With that being said, let's now move on to discussing the overall benefits of Treasury bills. Now, the first I already mentioned is there is nearly no risk because they are backed by the government. The second is that Treasury bills are exempt from state and local taxes, so if you're in a state with high taxes, this could be really nice for you, which this applies anywhere that you are in the US, but you do still have to pay federal taxes. Now, T-bills also give you more flexibility with your cash since they have short-term maturities. And on top of that, they can also be very easy to sell when using a brokerage firm. But an advantage toward using Treasury Direct is that you could have weeks ahead of time to place the same order instead of the small time frame with a typical bank or broker. Besides that, something else to note is that I-bonds have a max purchase limit of $15,000 per year, where T-bills are $10 million. And lastly, Treasury bills can be bought in small amounts so many investors can purchase them. So going off of that, I'm going to show you exactly how you can invest into them and then use real-world examples. So the first option for you is to purchase them through the primary market, also known as through auction. So the primary market is where newly issued T-bills are initially sold to investors directly from the government. And the most popular way to get T-bills through the primary market is through Treasury Direct. Treasury Direct is the official website of the U.S. Department of the Treasury, where you can purchase newly issued T-bills or other options directly from the government. Now, the interest rates that are decided on these newly issued T-bills are decided on through an auction. These auctions are run by institutional buyers and banks that do the bidding, and whatever they settle with is the rate that us investors will also receive. And as you can see by going through their page, you can see their auction schedule that shows each treasury type and when they are released in the upcoming months. You can also see at the top the announcement dates, auction dates, which those are the dates we must place our order before, and then settlement dates, which is when the purchase will actually settle. And although Treasury Direct is the most popular way for you to get newly issued T-bills, online brokers and banks allow you to as well, and that may even be the easier option for you. For example, you can do so on Vanguard, Charles Schwab, TD Ameritrade, or even Fidelity, where if you go on Fidelity and go to News and Research, then Fixed Income, and click on New Issues, you will see the option for Treasuries, and this is through the primary market. So besides the primary market to get newly issued T-bills, there's also a secondary market where previously issued T-bills can be traded upon investors. Think of the secondary market as a marketplace that can vary based on supply and demand and also the movements in interest rates. The secondary market makes buying or selling Treasury bills much easier as it is an open market where there's a lot of liquidity and flexibility when it comes to managing your Treasury bills. This is also convenient for those that have accounts on something like Fidelity, where even on a Roth IRA, you can purchase Treasury bills through their platform. Now, the way I like to view the difference between the primary market and the secondary market is the primary is like buying a brand new car, and the secondary market's like buying or selling a used car. Except the price differences for Treasury bills are pretty similar, where obviously cars are not. Just for fun, I researched this, and it states that a brand new car loses somewhere between 9 to 11% of its value the moment you drive it off the lot. But an important thing I want to mention about the difference between Treasury Direct and other online brokerages is that with Treasury Direct, you can purchase Treasury bills in increments of $100, where most brokerages are $1,000 increments, which means the minimum required amount you need to buy them on brokerage firms is $1,000. Well, there is one other way you could buy into Treasury bills that have no minimum required amount, and that is through ETFs. ETFs are basically a way where you can invest into many different types of Treasury bills all at once. Now, there are many examples you could find if you look them up, but a popular one to mention is the iShares 0 to 3 month Treasury Bond ETF that has a ticker symbol of SGOV. This fund has a 30-day SEC yield of 5.34%, and basically that yield reflects the interest earned after deducting the fund's expenses during the most recent 30-day period by the average investor in the fund. And by looking at the stock's chart over the past year, it's pretty obvious to see the fund makes its payments every month instead of normal Treasury bills where you have to wait until it matures. Alright, so the three main ways to purchase Treasury bills is first through Treasury Direct, online brokerage firms, or through ETFs that are on nearly any brokerage firm. And when it comes to selling Treasury bills, you can do this at any time because there's not a lockup period. Just be aware that because rates do change, you are not guaranteed to have the exact amount earned that you were initially supposed to when you submit the order. And basically how this works is that say you purchase a T-bill at 5% and then the Fed hikes interest rates, well, there will be more demand for the newer T-bills, and your 5% T-bill on the secondary market would not be as valuable due to less demand for your T-bill. But this could also work in your favor if you get that T-bill at 5% and the interest rates tank, then your T-bill is going to be extremely valuable to other investors. But what I personally recommend is to just purchase the Treasury bills, not play around with them, and hold them until maturity. So with that being said, I'm going to show you how on Fidelity you can use all three ways to invest into Treasury bills, and then after that I'm going to discuss more about a T-bill ladder. But first, let me walk you through a quick example on how you could purchase a Treasury bill on Fidelity through the primary market, also known as through auction, then the secondary market, or even with an ETF on Fidelity. Alright, so for the primary market, you are going to hit News and Research and then Fixed Income and hover over New Issues. From here, you have to hit the expand button on Treasury, and then you'll be able to see the options for you. You can see the expected yield, which is the interest rate you're going to earn when you purchase the Treasury bill and hold it the entire length. You can also see how they all have an auction date to close on the 5th of September, and then a settlement date on the 7th. And then the last thing to see is the maturity date, where one option is roughly 6 weeks away, then another is about 3 months, then 6 months, and then 12. To me, the best option would be to get the 6 month as it has the highest possible yield and is a time frame I'm interested in. From there, you simply click on it and continue to fill in the information like the specific account, how many you want, and remember, one quantity is $1,000 of a face value. And then I'm also going to select auto roll, which is basically a way for you to have your Treasury bills automatically reinvest into a new one once they mature. After that, you can click preview and submit the order, and then after that, the auction will take place and the position will settle, and I'll have control over one Treasury bill in the specific account I purchased it on. Alright, so now let's look at the secondary market where you can buy or sell Treasury bills without having to wait for an auction. So from the fixed income page, you can see all of the Treasury options, and something to notice here is that the rates after the 9-month options become higher for CDs than they are for Treasury bills. Now let's say you click on the 6-month Treasury where you now have many options to choose from, and on this page you can see the maturity dates, which are when the specific bill will expire and you will receive your earnings. Then there is the yield to worst, which is the most conservative potential rate of return that you could expect to earn even in the worst case scenario. Then there's the yield to maturity that shows the potential rate of return that you could get if you hold the security all the way until it matures. The reason these are both identical is because Treasury bills are not callable. This means your bills cannot be redeemed early by any issuer before the maturity date. Alright, so moving on from there, let's just click the first one we see as an example, and you can now see more details on the bill, which if you are interested, then you can continue to click buy after that for this example. From there, you can see at the top the ask price, which is the price you would pay if you were paying the minimum order of 300 Treasury bills, and it shows to the right at the minimum ask quantity. Important note is that it does not mean $300, it means 300 bills that are $1,000 each, so that is roughly $300 worth as the minimum to get that price and that yield of 5.464%. Then to the right of that is the third-party price, which is the price from third parties that do not include Fidelity. Now, because I'm not getting a minimum of 300, which is $300,000, I'm only getting one and spending $1,000. I spent some time looking around and couldn't find any options at the moment that have a minimum of one, and that's most likely due because of high demand since T-bills are at extremely high levels. If you want to see more content on this about how to buy them on Fidelity, I made an entire video on that, which I'll have linked in the description below for you to check out after this video if you're interested. So because of that, moving forward, let's say I want to buy $10,000 of Treasury bills. That is the minimum order of 10, and we can see that. So from here, I'm going to select it, and the price is a little bit higher than the ask price listed above, and that is extremely small of a difference and won't really affect me, but it is different, and to the big banks and other interested institutions, they obviously want the best rates possible. So now I'm going to type in the quantity, and that's going to be 10, and as you can see to the right with Treasury purchases, you cannot change the order type or time in force. It must be limiting price and fill or kill, and this is to ensure that the entire position is executed at the price in a timely manner. So basically what this means by ordering the 10 bills is that you are going to be paying $9,772 to get the Treasury bills, and in 6 months you are going to be receiving $10,000. For those that are lost in thinking, wait, because a 5.457% yield should be making this discount to be $9,453, the reason it is not is because that rate is an annual rate, and this Treasury bill specifically has a 6-month maturity. If you were looking at a 12-month maturity Treasury bill, then yes, a $9,453 cost would be what you pay in order to get $10,000 back after a full year. But back to the page, from there you can click on the preview order and you'll be able to double check your information before submitting. And don't forget that if you do want to sell your Treasury bill before maturity, that you are going to be able to see this in the specific account that you purchase it through, just like any other security. Another point to mention is that if you have any issues buying or selling Treasury bills on Fidelity or any other brokerage firms, you should call their customer service, where Fidelity's at least is very good and shouldn't take long to get the help. And no, I'm not affiliated with Fidelity, even though I would love to because they're my favorite investing platform. Besides that though, let's look at ETFs, where you can get these on nearly any platform, and if you wanted to on Fidelity, you could look up SGOV. All you need to do is research that and click buy, type in the amount you want, similar to any other ETF. But anyways, that right there is 3 different ways that you can invest into Treasury bills, and you can even do that all on Fidelity. And like I said, if you want to see a much more detailed video about Fidelity's primary, secondary market Treasury bills, then I highly recommend you check out my previous video that I've created that is linked in the description below. Alright, so moving on from there, let's now talk about the T-bill ladder. This means you're building a foundation of Treasury bills to recur on a specific frequency in order to get the most liquidity. As I said, you could sell your Treasury bills, but let's just say that you're someone that wants to hold them until maturity and even has auto roll on. To show you a simple example of a Treasury bill ladder, I'm going to use Fidelity and the options they allow you to choose from that are 3, 6, 9, and 12 months for Treasury bills. And so to build the most simplest ladder, this is what I would do. I would buy a 3-month Treasury bill now, then buy another one in a month, and then buy one more a month later. This way I now have 3 different Treasury bills that every month hit their maturity instead of every 3 months or even longer. So say all of a sudden I needed a good amount of cash, well, because I'm doing this T-bill ladder, every month I'm going to have the opportunity to stop reinvesting that amount and use that cash for something I need. Now this may make more sense for long-term bonds like CDs, where you may not want to load all your money in at once and have to wait wait 5 years without paying a fee. So that right there is just a simple overview that I briefly wanted to mention about a T-bill ladder. Let's now go over the things to be aware of when it comes to investing in Treasury bills. All right, so the first thing you need to be aware of is the subscribe button. Bet I got you on that one. But by hitting that button, you unlock a bright future to expand your knowledge on personal finance with me on this channel. But moving on, if you remember from earlier, I discussed how Treasury bills are actually very easy to sell on online brokerage firms. Well, the truth is they're actually pretty difficult to sell on Treasury Direct. And in fact, Treasury Direct requires you to even have a 45-day minimum holding period before you can sell or transfer any security. The process they have for this is pretty difficult, and they additionally say that this means you can't sell or transfer a 4-week T-bill from Treasury Direct because it matures in less than 45 days. So if you want the flexibility, going through an online brokerage firm like Fidelity or Vanguard is probably the better option for you. And another factor for you to be aware of that I mentioned earlier is that if you do plan to sell before maturity, be aware that the interest rates may have changed and you may get a different amount than you initially thought. And then something else worth mentioning is that in order to buy or sell Treasury bills, the bond market needs to be open, which is typically 8 a.m. to 5 p.m. Eastern Time, Monday through Friday. Also be aware of what Treasury bills are used for because they're not the best tool for building long-term wealth like the S&P 500. But at times like today with great rates, it may be a great addition for you to help diversify your money, and if you need something in the short term like a big purchase, this is a safe way for you to have it, pretty much get you a guaranteed return at nearly no risk. So if you don't need whatever amount of cash that you're not invested and you don't need it for a few months, you may as well not let it sit and let inflation eat it away when you could have an option like this. I actually have a video about the 4 best places to place your cash in 2023 that I think you will benefit from even further down the road, which I'll have a link to that in the description below. With that being said, thank you all for watching this video. Let me know in the comment section below if you plan to try this out and what types you purchase. Don't forget to check out my free Money Talk newsletter, and if you want to see my entire portfolio and how I allocate all of my investments, consider joining the Patreon community, which I'll have links to both of those in the description below. Share this video with anybody you think could greatly benefit from it, and don't forget to hit the like, subscribe, and notifications button for future Money Talk content like this.